A big bounce for the crypto market. You can see by the crypto bubbles chart over here that a lot of the altcoins are having a massive rally, and that is following yesterday's anticipation of the FOMC minutes which came out, and we will cover that. But the stock market also bounced from a technical level of support. So is there a possibility that this bounce could continue, or is it going to set a lower high, and which is going to be hit first, 22K or 26K for Bitcoin? We're going to address some of those questions on today's show. Without further ado, let's get straight into it. And yesterday was the FOMC meeting. So what happened over there, or the minutes at least? Here's a summary of the Fed minutes. Almost all Fed officials back 25 basis point hike in February and restrictive policy until inflation hits 2%. So basically repeating that they're serious about getting it down to that 2% level. Fed sees elevated risk of recession, most likely coming towards the end of the year. The big question is that priced in though? And then a few officials actually backed a 50 basis point hike in February. And then he says here that it feels like Fed pivot hopes of September 2022 all over again. And if you take a look at this from Benjamin Cowen, he says the Fed funds rate of 6.25% now enters into the chart. So you have over here 0.1% of them believe that the Fed funds rate is going to go all the way up to that 6.25% level. You know that we want that to obviously go down, but yet the market is still continuing to rally. And on this show, we obviously focus primarily on TA, technical analysis, looking at technical setups and technical levels. And we still consider the macro and what may come further down the line, which is why at the moment we've been playing the upside of these moves, but we're treating it as cautiously bullish and as a relief rally. So simply a relief rally within a broader bear market, with the potential of that relief rally forming into an actual bull run. But obviously, we can only make that determination when we get to the high time frame key levels of resistance. So weekly chart, using the Heikin-Ashi candlesticks over here, these have been phenomenal pretty much since the ultimate lows. Look at that indecision candle coming in at 16K, big massive candle up to 21K, pulled all the way back, gave you another entry opportunity at 19. And it's been up only ever since. We had one pause, which came on the 6th of February, soon after breaking that diagonal downtrend and retesting this region, which is the horizontal at 21,473 as support. That level held, strong wick reaction out of that zone, and pretty much prices have been up since then. Now, an interesting thing when it comes to the Heikin-Ashi candles, by the way, which a lot of people don't actually know, is that the wicks on the top are actually indicative of bullish momentum. So it's not like the normal candlesticks where if you see the wick on the top, that basically means that bears are taking back control, bulls couldn't hold price up to that level, and so prices suck back down and pull back down to those levels. This is actually indicative that a strong trend is establishing, which is why if you take a look at the strong downtrends, you have a lot of wicks on the bottom, right? Wick. Look in the strong bull trends. The wicks are all on the top end. There's no wicks on the bottom. So just a fun fact about the Heikin-Ashi candlesticks for you over there when you are using them on your relevant time frames. If you see the wicks over here, don't think that that's selling pressure. This is buying pressure. This is starting to establish a potential uptrend, a strong uptrend. So do keep an eye on that. But nevertheless, the resistance is real. We have a Bitcoin resistance at 25,000. Will that level get cleared? That is your 200 weekly moving average, the white one, and the strong horizontal yellow line, which we do need to break above. And I've said before, once you make a convincing break above, that break is probably going to be explosive towards the upside, meaning that as a breakout trader, you will struggle to get an entry. And I think the move will happen super quick, and you're probably going to reach anywhere between 27 and 28K. But is it going to close there? That is also another big question that needs to be answered. If price can continue to consolidate around this region for at least this week, close the week green and as a consolidation candle, that's okay. That opens a possibility that next week you might be able to mount through that. But we have to take it day by day, because at the moment it's a very choppy market. Of course, the market has a lot of indecision. You have equal cases from both the bulls and the bears of why it should go up or down. Ultimately, I like to follow the trend. the low time frame and the medium time frame trend has started to reverse towards the upside, which is why we've been playing it that way. And Dylan Leclerc over here shows that global net liquidity and the S&P 500 with SPX. You can see the correlation between that. It's been pretty interesting over here. So let's hope that more liquidity continues to come into the market so that we can continue to see prices go up. Now, obviously, we can trade the market both ways, but in actual fact and reality, it's definitely a lot easier to make money in an upward market as opposed to a downtrending market. So it would just make everyone's lives better. If you look at the Bitcoin CME futures, they're retesting their 200-day moving average cloud once again. So it came directly into that. You had the failed breakout, which took place over here on the left-hand side, and pretty much prices went down ever since then. This is now given our first major test into the 200 simple moving average. We bounced off of that, and now we're testing into the 200 EMA, which we did bounce off of yesterday and I think a couple of days before that. So currently, this is kind of an easy way for you to gauge whether the market is going to be up or down. As long as you can hold above these moving averages, you should be bullish, looking for higher prices, maybe not on the very short time frame, but I'm talking medium time frame. So over the next couple of weeks to potentially even the next couple of months, anything above and to turn those moving averages back up is a really, really good thing. If you deviate and go below those, so if you see prices come back down and lose it, so over here in the same way that you saw like this section over here, I think that was around 48K, that would become incredibly bearish. So just understand your risk levels and what you're playing with. Now, if you do take a look at the S&P 500, the key technical level that we were looking at yesterday for potential bounce actually worked out. So funny how this TA stuff does work. Sometimes you have your simple momentum trend line. This is on the 4-hour chart. You have the high, low, high, low. Now, still questionable because it's too soon to call it, but this is looking like it's probably going to bounce from this zone and be a high, low. If you see a reclaim for the S&P 500 futures above the 0.75 level, so above 40.50, so 4,050, then that would confirm the higher low. And then again, the target becomes the range high, which is where the previous highs were met at 41.78. The next level to watch, though, is between the mid-range and the yellow moving average over here. The yellow moving average is the 200-day moving average, which, similar to Bitcoin, the S&P 500 has reclaimed that 200-day moving average. And we've retested it successfully over here, bounced, secondary retest, bounce, and if there is a third retest and it can bounce off of that convincingly, it will give this moving average a chance to slowly start tilting towards the upside, and hopefully that means further upside potential for all markets. That will obviously mean liquidity is coming in the market as well. Okay, so some bearish posts over here from markets and 𝗵𝗻. Stocks could have room to drop further as the Fed's hiking cycle hasn't ended, and even the eventual pivot could lead to further losses, as such an event often happens during times of economic and financial stress. So you guys understand, I've shown you that chart many, many times, at least a dozen times. When the Fed does pivot, usually it marks exactly 1 month post-pivot that stocks make new lows. So with all our trades in mind, we understand that, yes, in the short term and the medium term, there is potential for small swing trades where this relief rally can continue in Bitcoin, potentially to 28 to 30K. But ultimately, the broader macro picture currently is still a little bit bearish. There is still the potential, as he said over here, stocks do have that room that they could, of course, drop further because the Fed are definitely going to keep rates higher for longer. I mean, they were pretty specific about what they've said multiple times now. With that being said, Total 3 is all a rotation game. Altcoins continue to be that rotation game. Lower high, lower high, lower high, breaking back into the main range over here. I've used the fib tool to mark out the range levels. So I have the 0.75 level, which just means 75% of the way through the range. Then you have the 50% level through the range, 25% of the way through the range, and the range low. So you would be looking for support if this does come down at hopefully at least best case scenarios, it's going to bounce from the 50% level. Worst case scenarios, you're going to revisit all the way down to the range lows. But obviously, you can prepare for that. You should still be relatively cash heavy at this point. So if If this does turn all the way back down and revisit the range lows, you have an opportunity to again accumulate altcoins at those extremely, extremely cheap prices. So when you're seeing altcoins pop off left, right, and center, I've said it every single day for over a week now. Take your profits while you can, because they won't necessarily last. At least according to this chart over here, it's all being rotated from one coin to the next. There's not additional new influx of capital that's coming into the altcoin market. Speaking of which, I wanted to quickly touch on Bitget. They do currently have a promotion. Let me just check what it is for you over here. So you have a sign up bonus over here, where if you do deposit $50, you get $50 in USDT futures trading bonus. That means they're pretty much doubling your money. And if you open a futures 5 times, you get 50 USD futures trading bonus. So I mean, there is, if you take 5 trades, you'll get an additional $50 free, meaning in total you get $100. You put $50 in, sign up, put $50 in, they give you $50, take 5 trades, they give you another $50 on top of that. Therefore, you have $100 to trade with. The link is in the description below over here. So that is for Bitget. Click the link below, sign up. And then also you'll stand a chance to win this Rolex by automatically joining and taking that trade. This is the Black Submariner. Hopefully you can see it. There you go. Should be able to see that nicely. Submariner Black, still up for grabs. There is 7 days left for this competition. We've been giving it away day by day on Run Show. You're welcome to join for the Bybit one as well, by the way. The Bybit one is blue. I don't know if they have the same sign-up bonus that Bitget have at the moment, but nevertheless, that is up for grabs. So do keep an eye out on that. Okay, the Ichimoku cloud. I haven't brought this up for a while, so I thought let's quickly take a look at it. At the moment, price is consolidating. You can see the reaction off of this level over here. And if you look at the blue line, that is the conversion line. So the blue line is the conversion line, the top one. And then you have the baseline, which is the red line. That had its cross, its bullish cross. Price obviously rallied up. We came back down below towards the baseline and then punched back up towards the upside, and now you see a strong wick reaction over here. So this is more for swing traders. You're looking for this cloud to cross in the same way that it has here, but you want this now to start to expand. So what do I mean by that? You want to see this cloud start to expand towards the upside like that, and then for these lines to spread apart further. That will establish a strong move. So you need to give it time to play out, which is why as long as the higher lows last, then the momentum is starting to shift towards the upside. Where are the higher lows? On the daily chart, that is your previous high low, right? Coming in with a closing candle at $24,000. Then you have your higher high. This is not a proper higher high, in my opinion. This is more a consolidation. What I would like to see over here is I would still like to see this consolidation take place for a couple more days, and then maybe for one more spike towards the upside, with a proper close within that region. Remember, I'm not a fortune teller. I can't tell exactly what's going to happen. Although you see a lot of those thumbnails, exactly this price target next week. Obviously, I can't tell. We're taking it day by day. And at the moment, pressure is still slightly towards the upside from a swing trading perspective. So looking for a close up here would be great. That would show that you have now confirmed higher high. And then you can even more confidently bid the next high low. When it pulls back, maybe it's going to pull back to the same level, around 23, 24K. But nevertheless, that would be your second high low, right? So first high low, then you'd be looking for your second high low. Then you're looking for your third high low. And that's how those trends become established. So you want to participate in this market. You want to participate in these rallies. If you're a short-term trader and you're scared, you can trade the range. I'm going to show you the range at in a moment's time. The range is big, means that you can make a lot of money. It's about an 8% size between the top of the range and the bottom. The Super Guppy indicator is still green. There is no problem according to this one of if you are holding your longs. Pretty much this told you to go long at just below 20. Okay, call it 20,700. Told you to go long. You came back for the secondary retest, 21.4. That set your next high low. And pretty much you're looking in the same way as what I just showed you on the Ichimoku cloud. You're looking for these EMAs, which are the little green bands, to start to spread apart to establish a strong trending move, which we haven't seen yet. Historically, this has given a 78.9% hit rate in its success when it gives a green signal and a move towards the upside. It usually works out that you get around 171% upside move, which in this case would take you to like 50, 60K. So let's not focus too heavily on that. Let's just focus on the relief rally up to 30K, which is the underside resistance, 28 to 30K, and then we'll take it from there and reestablish our positions if need be. Andrew Kang has shown over here that BTC has now gained 47% from the week that it first crossed the 50 level of the weekly RSI. High time frame weekly RSI remains in bullish territory and has not yet become overextended. So if you do take a look at that, that is the weekly RSI. He's basically showing that there's a lot of upside room over here for both the RSI as well as momentum oscillators on the high time frame. I know the MACD is only just crossing above its zero line, which means there's plenty potential for this move to still continue to the upside. There's a lot of momentum that can still kick into the market. That is what you want to derive from these indicators. And you get something called the bullish control zone when it comes to the RSI. And we use this strategy over here, which basically suggests that once you close a daily on the RSI, a daily close above the 85 level, which is marked by the green over here, every single time after that, you have 3 consecutive closes above the 85 mark within time. Obviously, it takes time for that to happen, which basically suggests an average move of 315% from the signal given, meaning that Bitcoin should still have further upside. Forget about the averages, forget about the 171% that I just gave you on the Super Guppy, forget about the 315%, focus on the repeatability of the RSI strategy. Suggests we should come into the bullish control zone again. Bullish control zone means momentum is in the bull's court and you should still be looking for upside. We had a great bounce off of this level over here. So very, very nice. That was the exact zone that I was looking for. A sweep of that region and then a strong reclaim. That's a bullish sign. Currently, we're still going to be within a range. So you'll see that you can see the range quite easily over here with the wicks at the top. And then you have the wicks at the bottom over here. Hopefully, price consolidates within that region for a while longer. And that would start to look like not a perfect bull flag, but a little bit like a bull flag. You have your pole, consolidation, 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 and then hopefully that one more breakout. So I'm personally looking for at least one more breakout. My risk's off the table. I don't have any risk in the market at the moment. I'm still in my trades, but my stops have all been moved into profit. Therefore, if price does come now below these regions, I'll be stopped out in profit. So keep that in mind, that the trades I've taken might be different to you. And the way that I'm viewing the market right now is less risky to you if you have not yet entered the market. So if you are fully in cash and you're thinking of entering now, understand your risk, right? You're taking a lot more risk. If you haven't, this would probably be a good place to have your stop losses below this wick over here, because this is what you want to see from a candle standpoint, coming into a key level with a strong bounce out of that. You want your stops now placed under there. If price comes back below there, then it's probably going to roll over and bulls are wrong. In the daily candle newsletter yesterday, there is also a link in the description below. If you've never heard of the daily candle newsletter because you're new, check that out. The link is below. I gave Chainlink as a trade opportunity yesterday, showing that it was coming into the previous week's mid-range. So here you have the range high, previous week's mid-range, previous week's low, which is the range low, looking for a potential high low to be set here and a bounce out of this region. So if you look at price action, there it is. Look, I entered too late on this, but I did actually take the trade. So look, I entered pretty much right here. Just now it's up about 5%. I took a Solana trade as well, so I'm up about 23% on that. This is on Bybit. I'll still continue to hold the Chainlink one over here because I do think that at the very least it's going to move towards the range high and potentially even break through that. One reason is I think Chainlink is going to be in the news today. Might get a little bit hyped because Coinbase have an announcement, and I think that they're using Chainlink as the main source to integrate with the project that they're about to launch around or announce around, I should say. So keep that in mind. Blur, I wanted to touch on Blur. Blur has completely disrupted the NFT landscape, basically overtaken OpenSea because they don't have as hefty fees as OpenSea. So therefore, we can look at this coin over here. It's got a fully diluted valuation of $3 billion, $3.1 billion. You need to ask yourself, is it worth it? Actually, let me know in the comments, please. Let me know in the comments, do you think Blur is worth $3.1 billion fully diluted? If so, and you think it is, also let me know why. I thought let's take a look at the chart on Blur. Let's see. I haven't actually looked at the chart. Is it worth getting into? Because sometimes these coins get mega hyped and occasionally it's worth catching it as just a momentum trade. So let's add it onto the bottom over here. Okay, obviously very, very illiquid. So let's forget that. We'll have to go into a low time frame. See, it's very difficult to chart something like this. In my experience, this is also a fun fact. In my experience, when a coin launches, call it an IPO. So in stocks, it's an IPO when it first hits the market. It usually sells off at least 50% off of launch. So the best way to get into these coins is to just wait a bit, wait for a little bit of price discovery, and then consider dollar cost averaging. So let's say, for example, you wanted to put $1,000 into Blur now. Rather take that $1,000 and divide it up and dollar cost average it in over the course of a month, as opposed to just smashing it in right now. Because if this plays out the same way that the IPOs do, you can expect that Blur will come down from here at least another 50%, which means that you could get it at around 50 cents. So chart-wise, it doesn't look like a buy to me. Obviously, I could completely eat my words because this thing's brand new. It's very difficult to chart, but chart-wise, you can clearly see that it's starting to establish a downtrend over here. You have lower highs. This is on the hourly chart. Lower highs with a swing low. Moving averages. Can you even use them on an hourly chart? I don't think so. I mean, look, that's so funny. Look at that. That's the 200 EMA on an hourly chart. It's like 3 hours old. So that's Blur for you guys. But let's go on to Bitcoin quickly on the lower time frames of here. Bitcoin is still holding above, I want it to be on the 4-hour chart. Bitcoin is still holding above the moving averages, which is a good thing, or the EMAs. I said that if it does come back down into this region towards the 200 exponential moving average, I would actually be adding towards my position. I would be adding towards my longs. So I'm not going to get scared if it gets around there. If it starts to close underneath there, then I'm going to stop out my positions and reevaluate for another entry. So here's your general range that's on the market now, or in the market. Let's just quickly, is that the right size? That's not a 4. There we go. Let's make that nice and big for you. Make that one big for you. This is the low time frame range that Bitcoin's currently trading within. Just a little bit of perspective. Let's zoom out. Hourly chart. So this area was tested as support and it actually held that. We have the trend line over here matched up with that level, bounce out of that zone. And now you kind of have this range with a question mark. Is this region going to be support? When I say this region, 23,334. You want to see that level hold. I'm sure a lot of longs were looking to place their orders over here and they got front run last night. You can see the way that price bounced out of that zone, but it's a big range, guys. So you can tighten your range up so you don't miss the order. For example, you're taking on a bit more risk. If you want to move your range level up to 23.6 and then the top of the range to the body closes at 25, look at what this would give you as a trade opportunity. So that's 6%. 6% on 10x leverage means you're going 60% up and then you make 60% profit down. Of course, it's never as easy as that, right? But essentially, that's what you're looking at. Buy the bottom of the range, sell the top of the range, 10x leverage, 60% each way. Pretty much by the end of the week, you're a millionaire. Easy. Thank me next week when you buy your Lambo. I'm just kidding, guys. Of course, it's not that easy, but in all seriousness, it is an opportunity. Just control your risk when you are taking these trades. My trades are $1,000 on those previous ones, but that's less than 1% of my account risk. I'm not going to really lose much. You want to trade, you want to use the little beans that you have to harvest a massive crop, right? So you don't want to go all in with all your beans in a sour field that's not going to work out, with bad soil where you're going to end up losing everything. You want to take those couple of small beans, put them into a healthy soiled field. And if that works out and you generate more crop, then you take those beans and then you can, again, try in other fields, because then you're not always going to get rain and sunshine, and you're not always going to get healthy soil where it's going to work out. So that is risk management for you in your trading. I think that brings us to the end. It's a pretty quick show, quick update. Essentially, the market is consolidating and expected to continue to do so probably for a couple more days. I don't expect magical fireworks. I think the overall range over here is going to continue to hold probably at least until the end of the weekend. Maybe on the weekend, altcoins start to go crazy. You know that the DGens like to trade on the weekends. Okay, guys, give me a like on this video. I would really appreciate it. Take 1 second out of your day. Get the algorithm buzzing over here. So send your likes out. Give me a comment if you don't like the video. I would also appreciate the dislike. It's extra engagement. I have no problem with a dislike. We'll take it on the show over here. We are completely honest on the show, and we want you to be too. Consider again entering into both the Rolex competition on Bitget as well as on Bybit. So remember, the black one is going to be for Bitget, and the blue and gold, which is actually more rare than this one, is for Bybit. And that's it from me, folks. I will see you all on tomorrow's video. Have an absolutely stellar day, and cheers for now.